Okay. All right. So I started the morning here. We'll look at the bond futures, which are falling. But you see, this whole interest rate focus that the markets have had with the inverted yield curve and such, the fact that bond prices are falling, the opposite has to be that interest rates, longer term interest rates, are going up, which will help improve the inverted yield curve worries. So this is obviously then a positive for the market that bond prices are falling. And so I use TLT for some of you that don't have bonds, but we're going to take a look at the bonds and just marked off an area where the 50 MA is, to just be aware that it's in alignment with this bottoming tail bar here. And that would probably be the point at which buyers would step up, and this could turn higher. So we'll take a look at the markets, which for the moment appear like they're going to go higher. We saw the reversal at the end of the day yesterday when the markets didn't go down, buying came in. And so, as we started with the breakout that occurred last week, which was suggesting the markets would go higher. Let's look at the spiders here. And this was one of the scenarios I wrote about in the advisory letter, where it's like, okay, so here we are with this move higher and the inside day. And if it takes that out, it should keep pushing higher while it's gapped above it. And that's always adds some additional risk when you get a gap above an entry point. And so there you have to decide whether you'll just buy it with a big stop, which is okay, whether you'll buy a 5-minute high, a 30-minute high, a pull back into the gap fill and reversal. And so you've got different ways of participating once a signal occurs. And then it comes down to money management, where you're going to put a stop. So putting a stop below here could make sense, but in the Mr. Schizo market, as I call it, that is probably too tight because we've got a lot of these wiggles and these whips, right? But nonetheless, the message here of which we've covered, this big breakdown suggested it was going lower. The speed at which things happen suggested it would go lower, shorting a bounce or some consolidation and then a break. And so this created all of this support, and now it's broken out, and that suggests it's going to go higher. So what I wrote about in the letter was, hey, you know what? That doesn't mean it has to go higher immediately. And if we were to get a pattern that took out this low and it sprung back up into a bottoming tail bar, that would be an excellent pattern as well. And now we have that. So this is what I call a correction bar. One of itself, this bar was a correction within this little congestion there. So the downside plunge was bought, where it was perceived to be cheap. Perception of being cheap doesn't mean it has to go up, but enough buyers thought so and then drove it up into the end of the day after some chopping around that occurred during the day. So now kind of get above this high, and ultimately, we have this high right here, which it's been hovering below this 300 level, and then theoretically it should go up. So that's what we're going to be looking for to see if it does that. Now, I imagine that, I think it's next week, we've got the Fed coming out and whether they're going to lower interest rates or not. And you have to believe that with all the back and forth that where they said that they would, but then the Fed chair said, oh, we got to get the data. What was the data? And it's still an unknown, but I guess the belief is that they're going to, and that's going to drive the market higher. So this pattern is pointing to that. And now how you participate in it is how you do. I mean, your plan, you're going to swing trade it, you're going to intraday longs or so on, different strategies based on your own way you want to participate in it. The Qs have been weaker. They actually came down into the top of the base. So you can see real easy way, relative strength, relative weakness. It's really common sense looking at a trend, support and resistance. And we say, oh, the spiders didn't go down into the top of the base. The Qs did. So they were showing relative weakness, and now they've got this resistance overhead to get through. But if the markets are going to push higher, they're going to get through it based on this bigger picture of this consolidation that created support and this gap up and consolidation. So the Qs will probably have more difficulty because of the relative weakness and the congestion here. But we'll see what they do. Right now, we've got this bottoming tail bar, and that's suggesting it's going to go higher. And so again, you trade it according to how you trade your own. Russell has been bringing up the rear. It had a good day yesterday. It finally cleared resistance, which it couldn't do last week when everything else did, and it's into the void. Meaning the void between here and here, like the others have. And I did mention that if it could do this last week, that it could be the one to have the greater potential for gains because it was the weaker in the past. And that looks like what it's going to do, or the possibility of what it's going to do now that it's entered this void area, and it could push higher. But overall, it's just in a trading range for almost the whole year here. So getting up to the top of the range would be a plus, but there's been buyers there every time. And so we should anticipate that they're going to be there again, and then we'll just see what happens when and if they get there. The transports have been doing pretty darn well, and amazingly, they're now leading the way up to the top of the range. They're almost there. So it's kind of a plus, but kind of a fly in the ointment in the sense of, well, the transports are getting up to resistance and they'll stall. And we look at all these markets that we want them to be moving in lockstep with each other. So with this stalling, anticipating it stalling, it could just push up through it, of course, which would be really positive to see the transports break out of this trading range. But initially we're thinking, hey, it stalled here, it stalled here. Well, let's see, it's probably going to stall again. We'll see if it actually does. But, we've got all these positives, and it was just kind of surprising. And I mentioned in the room yesterday, the green room, yeah, it's Dow theory, Paul, but, it doesn't always mean that it has to happen in the moment. So, we do a lot of intraday trades, of course. So you can't, while we can look at transports and see if they're participating, it isn't a reason for us not to participate with a long bias if they're not, because a lot of times they have a long lead time where, they're lagging, and then they eventually, they break down and so on. So we just like to see them participating when we have a long bias, but it certainly doesn't have to be. You think the semis are the new transports? I don't know. It takes me a while for me to adjust from decades of viewing things in a certain way, but you could be right. We'll see. So what I was going to say, looking at some of the stocks that got shellacked yesterday, it was like, look at McDonald's. And I mean, if you go and look at, if you have a bearish wide range bar scan, it was all the big names that were just getting, whacked. And so can the Dow and the market, the S&Ps make new all-time highs? Well, I suppose so, but this is kind of a, what's going on here with these big stocks not participating. Of course, we've got the Russell bringing up the rear, so I guess maybe the money is flowing into there, but that's not going to help the Dow. In any event, this year has definitely been a stock pickers kind of a market where a lot of chop, and not everything is this broad-based rally where it's just a no-brainer of throwing darts and finding something that's moving up. ES looks like the way to go here for a day trade, trading the ES or the micros, because this bottoming pattern here and pop back up. If this can get going above this base, I have to believe it's going higher. That 3,000 level, which is the 300 on the S&Ps, they probably stall there, but this pattern suggests it's going to go higher. So that's something I'll be looking at today. And we'll see if it can get through this area, and it shouldn't go back down below this 2960 because it held here, and this is where it came down to yesterday, and it held there. And what was it yesterday? Was these came down into the gap fill area. So this is on a 24-hour chart. But in the room yesterday, when I mentioned that, where's my time template? There we go. This actually come down to the top of this range there, and that's where I was looking for this to stabilize. And it did. It went up and it came down, and it was kind of a messy day until the end of the day. All right. NQs, as already mentioned, the weaker, they kind of blipped down there and came up. So, and they've been the one showing relative weakness. That doesn't mean they can't go up. And I kind of do like this pattern. It did come down kind of hard yesterday, but it recovered. And if it can get through yesterday's high, that opens up the door to moving higher. YM, which has been a bit stronger, kind of more of a grinder. I don't like this kind of a pattern, honestly, where, you see the candle bodies like that grinding higher. It could take off, but I think the S&Ps are better. But in any event, if you like trading that, I think it'll go up too. The Russell, or this is the futures, we already mentioned the fact that it has broken out and it's got room to run. And the assumption is it'll keep doing that. Oil up to the top of its messy range there, backing off. So acting the way it should within a trading range. The question becomes whether it can chop around here for a little while. And then if it breaks through here, well, it should really get moving at that point. And then you could have a nice trending, price action. You want to trade that. Bonds, we already looked at. As you can see here, the futures that are coming down to that 50 MA. And it's right in alignment with that prior bottoming tail. So keep an eye on that. Your bond traders are going to, let's assume some are short, some are looking to get long. That's going to be the spot. That 160 is going to be where they're going to look to do that. And then would see the intraday pattern begin to bottom out and make its turn. Okay, and gold correcting with bonds. They've kind of been moving with each other. You can see it broken through here, and it's right on that second swing low, it looks like. Yep. So, and then another thing to keep an eye on. You see here, and here's a great example of why, well, we use moving averages. They're as subjective. They're not as ridiculously subjective as, say, oscillators, because they're just, if you understand them, that they're, just using them as visual aids. But point being, in this case, that moving average is aligned with absolutely nothing. So while widely followed, it can have a self-fulfilling prophecy. It's aligned with zero, whereas bonds are aligned with that bottoming tail bar, which is going to be a pivot low if you look on the hourly chart, and price support. On the other hand, without us really digging down into the intraday patterns, there's nothing there on the daily chart as a reference. And silver, holding there on the 20, another example of a moving average becoming a self-fulfilling prophecy. It's a deep pullback. There's some congestion there, but the 20 MA again is widely followed as well. And big money managers dumping big name stocks. Yep, that's what Joe was saying on YouTube. All the big name stocks are getting dumped yesterday. W-Day, Marsh is asking me about. That reversed yesterday. And, the market, even something that's weak like this, and odds are it continues to be weak because the trend is down. I do see this congestion there to the left, but you could be shorting or be short the weakest stock in the market. And when the market begins to rip, and this doesn't really look like a rip, but yeah, yesterday, right, we go and look at what happened there at the end of the day on the spiders after they were bottoming out here. I mean, when I say rip, it's like, wow, look at the size of that bar on the 5-minute chart. So it's relative to this time frame. So when this happens, you know, in the broader markets do something like that. I mean, even, you know, and I'm making an exaggeration to call this junk because it was a big winner for a long time, but even the junk is going to rally. Now, this is at some support. So it is a bit of a concern. If the market breaks out, probably this, you know, this probably underperforms, but it probably goes higher with a pattern like that. So anyway, 9:20, Dan's on.
All right, good morning, folks. I don't see any problem children, so let's look at the gappers first. Unless you have a specific question about an open. All right, McGraw, you sent me a question about CGC. Yeah, if it can set up and make a higher low, that's marijuana stock, it'll be fine. No Doffel. A transport, wide range bar, closed at the top of the range, extended intraday, but a 1, 2, 3 on the monthly. Sure, that's ideally, it would give us a 1, 2, 3 to trade on Friday. Apple, remember I mentioned this one, it looked like, you know, top of the range here. And this was the first one I saw into the afternoon, into the close, where I'm like, wow, things are moving right now. Apple went, and then the broader markets went, and that's why I went home with a bullish bias. So we'll keep an eye on that. Target, yeah, 220, 225. Somebody mentioned win. Yeah, this is a big old W bottom. Absolutely. It's a W. I had this on my watch list on that day for a double bottom, 830. Then when it had that bear gap, I kind of took it off my radar. But sure, that has room. There's a few times, and here I looked at it for a put spread, but there was inadequate juice. LVS was acting better, his cousin, and I almost put it in the letter over the weekend over the high of this bar, and then it was a gap and go. Yuma here gapping up, earnings 330 or whatever. I don't know if it's earnings or not, but looks like a pump and dump penny stock toy. I don't trade those. FP&L. I just put FP&L in because I saw an article in the local paper about Florida Power and Light, so I thought that was the symbol, but it's not. But this is a bottoming pattern. Target, halfway from this fall. It's a light volume though, under 100,000. But just pointing out the pattern, it looks good. NE owns FP&L. You are full of macro information. Wow, look at the monthly on NE. Wow. Wow, I always like trying to find no-brainer entries. And you know where my eye jumped right at? Boom. Y'all see that? 430.12, that was a core long breakout. You had some bottoming tails, false breakdowns. Then you had this bar close over, 2 years of resistance. Then you had 3 more sideways in the upper half of that, and boom. Wow. LOVE, they are loving the love today. 2135. It's a big gap, but the weekly has room. That's worth watching. I'm going to put him down here. Boeing, I put a put spread idea out over the high for 9 days to expiration. GEM earnings, light volume, spotty, you're gone, no interest. Zulu Sierra got shellacked, but it's on our long watch list if it can stabilize because the gap's excessive. Wow, it's gapping way that down here. Look, that's the breakout area. That's called minor support from these prior highs. Yeah, that's, and then McGraw, 30-minute high. Let's also do a put spread on earnings. They'll have high volatility, particularly with a big old gap like that. They're going to be crazy spreads at the open. So just, just give it 10 minutes. Romeo Hotel. This has been on a tear. Look at this. Look at this run from the low. Wow, 100% retracement. No pattern. Play on earnings got whacked, 37 bucks, way down here. That's a nasty gap, but it's excessive. I wouldn't, maybe 30-minute low if it can't bounce. This looks like a penny stock toy. You're gone. GEM. Your entry was down here. Is this gap breakout day? There's nothing to do with it now. Farm. McGraw, you own a farm, don't you? 11, nasty gap down here. I got no interest. That's nasty. NEOG, I posted this yesterday. This is a buy over yesterday's high. I like this kind of 3-bar jiggling around here at major resistance. Yesterday's bottoming tail. That looks good. Roku, we were watching this short. Nothing to do with it now. These are now getting into yesterday's ADI. ADI, that ain't bad. Over yesterday's high. Let me put that in a different window. ADNT. I wanted to chop around sideways more just because it did a greater than 100% retracement. BMI we've been watching that broke out. I don't like the way it trades intraday though. Let's look at the fangs here. So Apple we looked at. Netflix was weak yesterday. Still weak. Google we have a put spread on, and we're actually long stock too. Facebook, nothing yet. Tesla, I wanted a put spread yesterday, but there was no juice. Amazon, it's had a little breakout failure there. It's lagging the Q, so I got no interest in that. Alex mentioned AMT. Yeah, I like these fluid bars that come slamming down. Yeah, we'll keep that on a watch list. And when they slam down like that, volatility will pick up. So that's on put spread, short put spread watch. Pins from yesterday is also on my long watch list. COG I was watching in the oil patch, ENLC. Also big, double bottom, reverse head and shoulders. Target up here, 9 and change. All right, we have a minute or so. Let me look at some of the opens in the weekly. Goldman, we're in trail mode. We got a put spread that expires Friday. Looks great. NOC, we have a call spread, and we're in trail mode to lock in profit in the video. Put spread looking good. And NXPI, put spread, and a directional in the swing letter. Swing letter here alphabetically. I'll get through as many as I can. Cara, Dish. We're in trail mode. Ecov. Okay, YouTube's asked, so we're long Ecov. YouTube's asking about Amazon. Well, I said I have no interest now for the reasons. It was a fantastic 1, 2, 3. And we had both a put spread and a directional. And I had a stop under the green bar, which, some of these things Greg was saying wiggle around and you start off with a much bigger stop. but it's lagging. It's, you know, lagging many things in the Qs and the other things. So right now I got no interest in it, long or short. It's a mess. I need more information. I got a breakout failure. I got a bottoming tail on this gap, minor support. Pre-market, it's weak. It's not gapping up with the market. So it's nothing. It's a nothing for now. All right. Google at least is holding, and it had a wild day on Monday with all the attorney generals coming out saying we're going to attack you. This Zulu Sierra upper right, yeah, that's a bearish pre-market, so that still looks lower to me, but we're keeping there in a 5-minute window and we're going to watch them. ADI, wow, Alex, you were a McGraw too. I wait 5 minutes and I time it with the market, and markets right now are coming in a little bit, so I like the pattern. I mentioned it, but I do nothing in the first 30 seconds or 5 minutes. All right, love is on our long watch list. MSG, bottoming pattern, but yeah, I like the, you know, the morning action right here. I put that on the list. Tesla ripping. That's a nice gap. Now, you know, I was looking for a put spread way the heck under here, but now we could do a put spread here for Friday if there's any juice. 228. $227.50. Okay, this one. Well, $5 wide is 30 cents, and that would be for 3 days. If it were like 45 cents, I would do it. Tesla can cause some pain. And Apple is on a 15-minute chart is doing better than Tesla. Look upper left is my 15. Apple's almost to my first target of 220. Look at that in 1 day. A NEOG trigger.